Hello and welcome to another episode of the Ecommerce Coffee Break Podcast. Today we want to talk about exit strategies for merchants. A lot of merchants have some kind of idea if they want to sell their business or not, or when they want to sell it, but they don't have a clear plan on how to do this. So this will be the topic today. We want to find out what's the best way to find buyers for your shop, for your e-commerce business, and what's the best way to go through these different steps. With that, I have Michal Oron on the show today. She's the co-founder and CEO of Fortunet, a leading investment bank focusing on the sale of premium e-commerce businesses. Prior to Fortunet, Michal was the executive manager and corporate lawyer for about 25 years, holding senior positions in international leading brands as a VP of business development and general counsel. Michal led IPOs, mergers and acquisitions on global transactions, and joint ventures throughout her career. So she's definitely the right person to talk to. Hi, Michal. How are you today?
Hi, Klaus. I'm fine. Thank you. It's nice to be here with you.
Michal, we're talking about exit strategies, about ways on how to sell an e-commerce business. Now, obviously, there's a lot of merchants that are building up their assets, their property, their brand. And at some point, they think, okay, there might be a seller out there or not. What's the best way to start with this whole process of getting into the idea of selling an e-commerce business?
Yeah. First of all, maybe make sure that you have sellable business. This is a business that can remain sustainable for the long term and not something that will fall apart tomorrow. So, and in order to be such a business, it should rely upon relatively strong assets. And this could be brand protected by trademark. This could be strong clientele base with the repeated acquisitions, differentiated products, or any modes that can support the long-term existence of the business. So that's the first thing. Maybe everyone can ask himself, would I buy my business? Is this a business that makes sense to be acquired by someone? Generally speaking, as long as there are positive cash flow businesses that continue to generate at least stable performance, or even better, to show growth, then this should be a very good start to assume that your business is sellable. So maybe that's the first thing. And then if you come to a conclusion that you want to sell your business, and generally speaking, your business is sellable, then you should start planning your actions in this context. So I assume that you want to hear what will be my recommendation here.
That's 100% right, yeah.
Yeah. So it's better to start preparing in advance. Use the time efficiently to make sure that you're well prepared to sell the business when the time is right. And there are different things that you can do. So one is to make sure that you are familiar with the benchmarks, which are relevant to different key parameters of your business. And if your business deviates from major ones, then try and explore how you can improve. So just, I can give example of different metrics. So, for example, what is the ROAS, return on ad spend, for your business? What is your EBITDA? What is your gross profit? There are different standards that your business can be measured by them. And it is worth learning those and adjust wherever possible. So maybe this is the main important thing. So start analyzing your business, identify what can be improved, and how truly strong and good your business is. The next thing is identify potential risks in your business. For example, Do you have a relevant trademark that protects your brand? And maybe here, just to give an example, we meet, you can see here and there, e-commerce sellers that incorporated their business, let's say in 2016, found the right brand for their amazing products and applied for a trademark for it. And then with time, they launched additional products, but they forgot to take a look at the list of their trademark and the list of products covered by the trademark. And actually, at the end of the day, they may discover that many of their products are not protected by their own trademark. The first product launch may down the road constitutes only a small portion of your revenue, and most of your revenue may not be well protected. So these are things that you should better discover in advance, and you can correct them. In many cases, you can correct them, but you need the time to do that. So, for example, you can apply to expand the scope of your trademark, but it may take, I don't know, a year or so. So this is just one example. So again, here there is a checklist that each business owner should go over to identify if there are risks in the business that are curable. Buyers would generally refrain from buying a business whereby most of the products are not protected by a trademark, for example. So maybe that's the second thing. And another thing which is very important to mention is the financial performance. And in order to improve your financial performance and control your financials, first you have to know them well. And as much as it may sound weird, we come across many times sellers of relatively large businesses, or not too small of businesses, that actually do not control their own financials very well. So you should better, and it seems trivial, but that's the case. So you should better have your financials calculated and edited on a monthly basis. This will allow you both to control better your business, identify where you should focus at in improving it and keep on growing your business, and also have it ready for a sale. So I touch different things that should be approached internally in the business before you even start making any steps outside of your business in relation to its sale. So let's call it cleanups, okay, in your business, just to make sure that you are ready. And then once you, of course, my advice will always be to get assisted by an M&A advisor. These are experienced people. For you, it may be many times it will be the first time, and if not the first time, it may be the second or third time, but getting assisted by someone that make it for a living and have concluded dozens or hundreds of such deals will save you time, and with the right advisor, you can gain much more money at the end of the road. So this will be my advice. But what should you do with this advisor? So maybe one thing is first plan what should be the right timing for you to start selling your business. So again, start preparing now. It doesn't matter where you are now. You should start preparing for sale now. And I didn't cover all the internal things that you should do. But that's no question. This is something that you should do. But when should you start the actual process for that? That's an important question. And here different aspects should be measured. What do you want? This is one thing. What are your aspirations? Are you planning to keep on managing this business for the next 5 years? So maybe you have some time. Do you want to explore whether you are able to sell it, or Do you consider selling it in the next year or so? Okay, you should speak with someone now. So these are your personal situation should be accounted for in making this decision about timing. The next thing is, what is the status of your business and what is the status of the market and the M&A market? So with respect to your business, you preferably want to sell your business when it is in a growth trend. It's not, people are getting married when they're young and beautiful for a reason. It's just easier this way. So the same is for your business. You should sell it when it is appealing and attracting and has what to offer to buyers. Also, declining business and businesses that require some turnaround intervention may be appealing, but it will be more difficult to actually build your case around that and find the right buyers and find those buyers that will pay you a good amount of money for your business. So better to sell your business when it is shining and has, it comes with a proven track record of success, and it is positioned to a continued growth at the same time. This is one. So this is about your business, and then the market. What is there a market for your business now? And here the market. When I say the market, so of course macroeconomics is always relevant, but different segments within the e-commerce space attract more or less interest at different times. So today, pet-related products, baby products, beauty products, and others may generally attract more demand than, other fashion, okay, for example. So you may want to explore what the market has to offer for your business today. And based on all of the above, you can take a decision about timing. This is that's important. Mm-hmm. So should I just keep on? It's a coffee break where I just speak and you drink all the coffee.
I take all the coffee in. Yeah, right. I think there's a lot of interesting things that you mentioned. I find it interesting that there are bigger e-commerce businesses that don't know their numbers. That's sort of, you should know your numbers, your KPIs as a business. And you touched on the market situation right now. Now, obviously, a lot of countries right now are sort of recession thoughts about it, and there's inflation going on. People are losing their jobs and so on and so forth. So it's probably a bit about more of a stressful situation right now for a lot of businesses to grow and to become sellable or to become attractive, as you mentioned, with the couple that gets married young, to find a buyer. Right now, in that situation, what's the status right now? Is there businesses out there looking to buy other businesses, or how's the overall situation right now? If I'm interested in selling my business, does it make sense to start a process, or should I rather wait until things become better again?
Yeah, so surprisingly, there are many active buyers out there. So companies that define themselves as acquirers. These could be either strategic buyers, companies that plan to go IPO, companies that are already publicly traded, just strategic players in different segments that want to develop their business not only organically but also through acquisitions, and those who hold funds available for such investments are actively looking to buy businesses. At the same time, there are some companies that raise money, those aggregators of the world. They are less, they operate mildly in the acquisition front, but they are still active. And also different funds, private equities or venture capital. These kind of funds hold dry powders that at the end of the day has to be invested. So altogether, there is available money out there looking to be invested in businesses, and e-commerce is one of the growing industries these days that generates positive cash flow, which is great, specifically in these times. So yes, there is a market. This is not the peak that we were able to see in 2021. We're not there, but it's a decent market. And of course, buyers are selective, so they will not buy everything. They will not pay the best price or the highest multiple for any business. But for the right business, for the shinier businesses, or for good businesses, there will be strong, solid buyers that will pay a fair amount of money.
Okay. Let me ask you about, you touched a little bit on industries, beauty industry, for instance. If I have grown my business to what kind of size do I need to have as a business to become attractive? Means what kind of revenue do I need to have? Team members, I don't know, market share. Are there KPIs beside of having my ducks in a row within the business that make it attractive for a buyer?
Yeah. So here it depends who is the buyer. But if I need kind of to relate to this question in the most general manner, maybe it's better to relate to the minimal size of a business that start to be more attractive. Although in theory there is a buyer for everything, because maybe you have a very small business and there is a private operator or a small operator that is looking to expand a bit the business, or sold his previous business and now looking to invest in another business, and then every business can be sold. But businesses that can attract more buyers interested in their acquisition, I would say, should have revenue of more than $7 to $10 million per year. Profit, let's say, on the EBITDA line should be 20% and up. And of course, as you go upper, then it becomes more of a relevant target acquisition. The reason for that is that, first of all, once you've met this, you cross this minimum barrier, you are proven to have a solid business, which should be less risky. Already coped well with some challenges, and then that's part of it. But it's not only about size, but yeah. So generally speaking, I would say that this should be kind of the golden number for a minimum sale of Shopify brand.
Mm-hmm. Now, with Fortunet, you're obviously helping sellers finding the right buyer and getting the process right. Now, in regards of a timeline, if I decide to sell and then the buyer has been found, for sure there's some other steps before I'm really out of the business. How long does that take usually?
After you found your buyer?
Exactly, yeah.
Yeah, okay. So you skipped one stage, and we'll get back to it later. But once you have your buyer, so ideally you should enter with your buyer into a term sheet or a letter of intent. In this term sheet, you would want to cover all the commercial part of the deal. Okay, so the legal part is out, but anything which is related to how much you will get for your business, under which term, what are the payment timeline, and what is your non-compete, what are the assets that you are about to sell, whether you should stay with your business and then you hand over your team as well, etc. Those terms should be covered by a term sheet. Once the term sheet is signed, then you can expect, an average of 60 days. It can be more than that, in which your business will be under due diligence. So the buyer would go over all aspects of your business, your financials, business aspects such as strategic contracts with suppliers, with key employees, your IP rights, any tariff and customs related information, sales tax, VAT, etc. All of these will be examined, and then in parallel, the deal document will be prepared. This will be either share purchase agreement or asset purchase agreement, and different ancillary documents as the case may be. All of these should take 60 days, maybe 90 days, and more or less something in between.
Okay, no, that sounds great. Now, you with Fortunet obviously helping not only find the buyers, but also preparing everything to make this process as flawless as possible. How does that work? What are the steps to get everything ready?
Yeah, so for us, it depends if we start working with the client well ahead of the sale or just at the time that they want to sell their business. If we're starting earlier, we can help getting prepared. We can help analyze, reviewing the business, going over different parameters and exploring what must be improved, what must be corrected, and what can be improved and corrected. And then when we feel that we are ready, then the process itself starts with gathering all the data about the business, because we, like the buyer, must learn the business thoroughly. And when we approach buyers, we know the business at least as well as the owner. This is what usually we see ourselves, that we are experts in those business at least as much as the owners. And then we prepare a business analysis based on all this information and an investor deck, because you want to control the narrative of the story of your business. You need to present everything, but in the right context. So if there are things to emphasize, because this is where the potential lies, or this is where there is a huge opportunity that you haven't exploited fully yet, you should point it out. If there are different challenges in the business, you should put them in the right context, because they will be discovered eventually. So better to cope with them in advance and make sure that the story is well presented. So this will be the first step. And then this deck, together with your financials, that must be well edited, well classified. Sometimes we explore whether different expenses can be added back. In this way, you present not your EBITDA, but your adjusted EBITDA. So we help with that too. And then what we do, we decide on, we are searching for the right buyers. Here we must identify who those should be, which buyers should evaluate this specific business in the highest valuation, because of course a certain business doesn't necessarily worth the same for all buyers. It all depends on their own specific plans. So we will identify those buyers and will approach all of them at the same time, more or less. The idea, the philosophy behind the process is to try and create a competition and bring to the table as many buyers as possible at the same time. Of course, this is very much market dependence, because when the market is super hot, then very easily you get many buyers chasing after you. If the market is more challenging, then it may take more time and not necessarily. But even today, even in those market conditions, for the right businesses that we're working with, we're able to discuss with 10, 20 actively interested buyers interested in acquiring the same business. So we help them understand the business. We provide them with more information as they require. Of course, only after they sign a non-disclosure agreement, which is also part of the process. So if you do the process yourself, you must make sure that you don't disclose information about your business without having someone committed to maintaining confidential. And then we negotiate with those buyers that are interested. And then these negotiations look differently in different deals. And of course, the idea here is to obtain the best result. The best result is the highest multiple and best payment terms and other terms, because you can get, when we're talking about payment, then there is the cash that you get, and potentially you have an equity incentives in the future. earnout payments, how will you be paid for your inventory, etc. And when you will get any portion of the deal price. And also we are negotiating the deal structure. So should it be a share purchase agreement or an asset purchase agreement, and etc. It all depends on your tax considerations and legal considerations. From there, so we are helping closing the term sheet and also helping, running the whole project. We are after the term sheet, we are kind of project managers, coordinating the due diligence, coordinating the legal work, helping solve issues, crises that tend to appear during these processes until the deal is closed. After the deal is closed, you also need some help, because so we call it a kind of post-deal support, because maybe you have earnout payment after the deal, and we should monitor together with you whether you are entitled to receive your earnouts, etc. And issues tend to come, and we cover it all end to end.
Okay. I mean, that already shows selling a business is not an easy process. There's many steps involved, and it's better to have a partner on your side who asks the uncomfortable questions and not the buyer. So you're prepared, and somebody who basically polishes your business and to really make it shiny to get the most out of it. What's your pricing structure? How do you charge your clients?
So we are partnering with our clients. Generally speaking, we are paid on a success based only. So we don't charge anything upfront unless for specific cases, and we just we're getting a certain percentage of the deal price that we're able to obtain. Maybe one thing that I forgot to mention, it's also very important. If you're looking to sell your business, I'm sorry, I'm getting back to your other question. If you are looking to sell your business, you should explore who are your buyers all over the world. It's e-commerce. It's not that important where you are located. You just need to find the right buyer. It doesn't matter whether these buyers are in Dubai, in the US, in Europe, Australia, or anywhere else in the world. So you should aim more or less, of course, but to cover your buyers globally. So this is something that we do too.
That sounds great. As it shows, as a small, medium enterprise, ready to sell your business, many steps involved. And I think that's a really good tip. The seller or the buyer might be on the other side of the planet, and then it will be very difficult for yourself to find them. Where can people find more about Fortunet?
Where?
Yeah,
so we have a website, www.fortunet.net. I'm available always to answer any question. And the rest of the team, we're a team of 40 people, and all of them are available to take questions and looking to help wherever possible.
Cool. I will put the link in the show notes, and you're just one click away. And I'm sure there will be many people approaching you with a lot of questions because it's a complex topic. Michal, thanks so much for your time. I think that was a very good insight on how selling a business works and what you need to take in consideration before really doing this. And I hope a lot of listeners will reach out to you and ask for more info. Thanks so much for your time today.
Thank you, Klaus. Thank you very much.
Hey, Klaus here. Before you go, I would like to invite you to become part of the e-commerce merchant pro community to get actionable advice from other Shopify merchants who already have achieved what you are aiming for. Our community is a safe place to actively grow your online retail business with the support of the most amazing and helpful group of e-commerce entrepreneurs behind you. Running a Shopify business is tough. Don't do it alone. Join us now. You will find the link in the show notes. Also, if you think your online store has conversion or marketing issues and you would like to have a fresh set of eyes on your business, then drop me an email at klaus@klauslauter.com and let me know a little bit about your business. It might be beneficial for you to have me look over your store, offers, emails, and ads, and get an unbiased outside perspective and guidance to help you make most of your online business. Thank you as always for tuning in today. I appreciate you. Until next time, and I talk to you soon.